I am Araceli, a wealth advisor, real estate investor in the United States and Canada, and creator of Wealthy Women in Real Estate. Every week, I meet with Colette, a real estate broker and a real estate investor in Canada. We come together to talk about all things real estate investing and how to increase your wealth. Join us. Welcome, everyone. This is Araceli, Transition Wealth Advisor and investor in the US and Canada. I'm here today with my partner Colette on a weekly call, and we have a very interesting show today. Colette, can you introduce yourself and I'll tell you what we're going to talk about.
Sure. Hi, everybody. My name is Colette Rabba. I am a residential real estate broker in the GTA, West End. Araceli and I like to talk about real estate and finances because they go hand in hand, and we want to give great information for everybody out there who is looking for real estate, finances, insurance, and everything that goes with any kind of income property. So welcome to the show. What are we talking about today? Sorry.
Hey, yeah. So today we're going to have it's a subject that is more on the finances side, okay? And the reason that I wanted to do that is because I actually had a call from a realtor, not you, but I wanted to clarify because he asked me, he says, can you give me a quote for my clients? They're looking for mortgage insurance. And I said, okay, so what do you mean? What kind of insurance do you want? To have life insurance? And I said, no. Right now they're looking to buy a property with only 10%, but their mortgage insurance is coming out really high. And I said, wait a second. Okay, so what you're talking about is the high ratio mortgage insurance that you need to get if your down payment is less than 20%.
Right.
And exactly. So it's not the same. Okay, so that's what I wanted to kind of clarify that. And that insurance is actually to protect the bank.
Right.
Okay? Because if you have less than 20%, they consider you at more risk. That's what is a high ratio mortgage. And
right.
This is only issued by the CMHC, which is the Canadian Mortgage and Housing Corporation. You cannot get it anywhere else. And this is added to the amount of the mortgage that you're getting. So just wanted to clarify that. But on the other hand,
sorry.
Yeah, go ahead.
One step further is they group the payment into your mortgage, so you don't really see the two different prices. You don't see the insurance price versus just your mortgage, so they group it all together.
Correct.
But, yeah. So what we're talking about today is something a little bit different, but as important.
Yeah, exactly. So I just wanted to clarify what that meant. And if you are thinking about a property that is, and you're putting less than 20%, you will have that added to your mortgage automatically. They will never give you the distinction there. So you just have a mortgage payment and they added that amount right at the beginning of the mortgage, right?
Yeah.
But today what I wanted to talk to you about is the mortgage insurance that they give you after you get your mortgage. And that is to make sure that if something happens to you or your partner, if you do have a partner, that the mortgage gets paid. Okay?
Right. Sorry, I'm doing this because I also had to come to you because when I separated and I was the only person that's paying the mortgage now, they want to make sure that I'm not going to go and kick it, and then they're not going to get their money too. So technically speaking, it is also the bank that wants a reassurance that if you do pass away that you are insured for the amount of the mortgage, but I'll let you continue.
Mm-hmm. So that's exactly what it is, but I want to make the distinction that the type of mortgage insurance that they give you at a financial institution is not the same that if you get your own individual insurance. Okay.
Right.
So let me share my screen. Yeah, go ahead.
Yeah, share your screen. It's not about the house being insured, and it's not, homeowner's insurance where if the house burns down.
Yeah.
It's about me if something happens to me, the homeowner, and I can no longer pay the mortgage. So the banks really just want to know that they're going to get paid no matter what. So it's really about life insurance.
Absolutely.
My life,
right?
Not the house. That's the difference.
Can you see my big screen or do you see
Yep.
two screens?
No, I see two. The next slide I see on the side, which is okay. You can
Okay,
both,
give me a
but
second. I think I can just do.
you don't want anybody to cheat and see the second slide. Yeah, no, I see.
Can you see
Yeah.
only one?
Yes, yeah.
Okay, so this is basically how it works. If you can imagine that you're gonna start, you bought a house and you have a big amount. So let's say the house is $1 million, that's what you're insuring. If you get the mortgage life insurance with the institution, I'm not gonna say bank because it could be some other institution, right?
Yeah.
That coverage that you have on your life, so if something happens to you, this is what they will pay. So the mortgage will continue to go down as you pay every month that you pay over time. But your coverage, like what you're paying for to be covered by it, which is called premium, it stays the same.
Right.
And that is one of the biggest things that you want to understand about this product.
Right. So even though you're paying down your mortgage, so let's say now my mortgage is $500,000, I'm only covered for that amount. I'm not covered for what I've been paying for at $1 million at the beginning.
Exactly.
So that's kind of not fair. I don't like that.
I
If I'm
know.
paying
So
the same
that's
amount.
why
Yeah.
I always try to educate people about what are the options that they can have. So I put this together so you understand what is to have your own individual insurance versus the bank or the financial
lender.
institution, right?
The
Yeah,
lender.
the lender.
Yeah.
So you have level benefits, as I was telling you. As you pay your mortgage, if you get mortgage insurance with an institution, you will only get the amount that you owe, not the amount
Yeah.
that you originally qualified for.
You're only covered for that amount. So if I said I started at $1 million and now my house is it's paid off and I only still owe 500, I'm only covered for that amount.
That is correct.
But I'm still paying for my original
Yeah, if let's say your
$1,000,000.
premium was $100,
Right.
you continue to pay $100 even though your benefit is a decreasing benefit. That's what it's called, okay? So the benefit is less, but you still pay the same.
Boo!
I don't know about you, but I like to have kind of a level.
I agree. If I'm paying for it at $1 million, why should I not? And I'm still paying for it. Why am I not paying? Why am I not covered for $1 million? And then whoever gets that insurance money, why are they not getting $1 million?
Exactly. So that is the first thing. So with your own individual insurance, you will have whatever amount you qualify for is what you have continuously, right?
Yeah.
Now, the flexibility to choose the amount of insurance. First of all, the majority of people that have the bank insurance, they're only covered by what they owe in that insurance. It doesn't cover anything else, right? Like if you have any other debts or you want to leave something behind, most people will actually get more than just cover the mortgage amount, right?
Right,
So
of
here
course.
you have the flexibility to choose. With the bank, you don't. You have a beneficiary. That means that you decide who's going to get that amount.
The bank gets it no matter
is
what.
actually the beneficiary when they sell you that kind of policy. There's no
Right.
way that you can collect the money and continue to pay. They get it, right? They just pay the balance of the mortgage.
Another thumbs down for the bank.
Yeah, exactly. This one is a term of insurance. So you can have 10, 15, 20. Sometimes you can have permanent insurance if you like to. With the bank, you don't. You are with the bank for however long you are with them. Only, right?
Okay.
So let's see, this is a big one to me, which is portability. With your own individual insurance, you don't have to requalify. Let's see, how often people change mortgages? Every 5 years, maybe 6 years, you get another offer from another institution. So now, guess what? You're gonna have to requalify, and you're probably gonna be older. And life insurance always goes by health and by age.
At age. Yeah.
So if you're older, obviously the premium will be higher. Plus, let's assume that you were in that property for 5 years and something happened to you or your spouse. You got a heart attack, were diagnosed with something. guess what? At that point in time, when you want to renew your mortgage and want to get another institution, they will not insure you at that time. So that's why it's super important to get it as soon as you can, and when you're healthy, and obviously the sooner the better, right?
Right.
So this one here is keep insurance after loans is reimbursed, right? So
Okay.
that means that
Yeah, if I paid off my mortgage.
exactly, you still have your insurance in place. You'll still get that money. Well, not you, your beneficiary, right?
Right.
You have the conversion option to permanent insurance. If you have got some term insurance and you're still having your mortgage at certain age, let's say at the length of the term, some people get 10-year insurance. You can convert it to a permanent insurance, so you have insurance way past that you can use for other things, not only to pay or to cover your mortgage, right?
Okay.
The premiums also will not change even if the loan amount increases, right?
Okay.
So if you have the same mortgage and your mortgage decreases, your premium is still the same.
Yeah.
And this is so important. It's fully underwritten at the time of the application and not at the time of claim.
Okay. Explain what underwriting means. A lot
Exactly.
of people don't know what that means.
Underwriting is basically the company, normally insurance companies, they will do a check on you directly at the time. And
Like my
depending on
physical
your
health.
age, depending
Okay.
on your age, they will either do some kind of a test, right? Sometimes it's a blood test, but they will tell you right there that you're healthy and that you're covered.
Okay. So get healthy first, work out, lose weight, stop smoking, and then ask for the insurance just to be safe, to get the best
to be safe. Well, if you're gonna stop smoking, I recommend that you do it for at least a year.
You should always just stop smoking, period.
Stop smoking, right? But
Yeah.
for rates, it's very important as well because the smoking rate is very high. So that's one of the reasons that I really recommend that you stop smoking if you do, right?
Oh yeah, and just your skin will look better. Come on.
That's right. And obviously this one, the underwriting is done later on. So if
That is
some-
so important. So important.
If for some reason you decided to answer no to a question that might have been yes because you didn't understand the question, they will decline your claim. So
Right.
that's why you want to have your individual insurance. You know that you're covered. You don't have to worry about it.
Right.
Okay?
And like the nice thing, what I like about it, again, to say it this way. So if I have a $1 million policy on my life and I only have a $500,000 mortgage, let's say my kids who are going to actually be the beneficiaries will take that $1 million, pay out the mortgage, and then still have money aside for whatever they want to do. Or they don't have to pay out the mortgage at this point. They can do something and inherit, like they're going to be inheriting the house too. They can take that, get their own mortgage, and then have the $1 million to do what they want with it. So really, it's so flexible that I love that more than, and I know the banks like to see some kind of insurance to make sure that they're not going to just, be high and dry. But don't worry about the lenders. They always get paid. They always find a way to do it.
Oh, yeah.
So the insurance is really for your beneficiaries, for yourself to feel confident that if something bus hits me tomorrow, knock on wood, it doesn't happen. But just in case, I know my kids are taken care of. They don't have to worry about something like a mortgage that right now as kids, they can't afford to pay.
Of course.
So it's that nice kind of buffer that you are offering.
Yeah.
That it's not, you're not held by the banks. And this is the other thing too. Not just mortgage brokers, but the banks themselves. Just, when you're doing your mortgage, it's like nothing for them.
Yeah.
Like they just make you sign and you don't even know what you're signing sometimes. You have to ask those questions. Why do I need it from you?
Mm-hmm.
Why should I get it from you?
Yeah.
Can I get it from someone else? Can I go to an independent person or more insurance company and do my own insurance? Always ask those questions.
So what I was going to tell you there is that the majority of people, they think that they have to get it with the institution. And that is a no-no. And the reason that they do that is basically they put a paper that says, oh, would you like your mortgage covered if something happened to you? They don't explain to you anything. And they say, okay, right?
Yeah.
I remember that because that's my first mortgage. That's what I had. And I was like, nobody explained to me what it was for.
Same thing. The mortgage agent just sent me the papers and said, here you go, you have it. And after, everything went through, and I said, okay, fine. I couldn't deal with a few other things because I'm going through separation at the same time. And I hate to say that they might take advantage of that, of somebody who doesn't read the paperwork and they don't know what they're signing. So to go back, once I got that form in the mail to say, hey, you have this insurance. And I went, well, what's this insurance about? The first thing I did was call Araceli and said, hey, what is this? And then you're the one. That's the thing. That's what we're here for. Call Araceli, call me to say, hey, I have this thing. What does it mean? Or your mortgage broker to say, I don't understand. What is it? Yeah. But don't let them.
If you are already paying for it, you already have that money set aside for it. May as well you get something that is going to benefit your beneficiaries better than what is going to benefit just the institution. So.
And as far as I know, you can cancel it at any time. So the banks can't hold you to that to say, oh, you have a 5-year contract with us.
Yeah, no.
Without you knowing what you're signing, that's not allowed. Yeah. So always, be confident and ask those questions. And if you need help, if you need somebody to talk for you, please call us. Yeah.
Absolutely. So I hope this helps to clarify, obviously, the mortgage insurance. That is when you get a high ratio mortgage, that's completely different. And then the mortgage insurance that covers your life by the lender. And then your own individual insurance that is for you. You decide who gets the money, and it's a level coverage.
Absolutely.
That's basically what I wanted to clarify today, because if somebody called me with that question, I know somebody else has it out there.
Absolutely. And you know what, to not make fun of real estate agents or, anybody else, we all are in our lane. So real estate agents, we do the one thing. We don't do mortgages. We don't do insurance. So really talk to the right people with that very specific thing in mind. We, as somebody in that field, we should know about those certain things. But I'm really happy that agent called you to find out the answers. That's
absolutely, because I know that if somebody has it, and because sometimes the terms kind of get used interchangeably, then you don't know what they're really talking about. So really stop and clarify. If you're not sure, then just ask more questions.
Absolutely. Thank you so much for clarifying that.
Yeah, you're welcome. So I hope that helps, and we'll see you next week. Thanks, Colette.
Thanks for joining us, everyone.
Bye.
Bye.
Thank you for being here on the show. Please remember to subscribe and hit the notification bell to get notified when there are more shows available. And if you would like to have more information on how to start investing in real estate, please visit my website at www.aracelihernandez.com. Thank you.